Hello, good afternoon, everyone. My name is Arnold M. Suleiman, and welcome to Introduction to Financial Management. In this presentation, I am going to discuss all about financial management, its function, and how it benefits the company. Let's start. The first thing that comes to our mind when we hear the term financial management is how the company will generate income, but it is more than that. We have to dig deeper. So financial management is more than keeping accounting records. It is an essential part of organizational management and cannot be seen as a separate task to be left to finance staff or the honorary treasurer. So what do we mean when we say financial management? So it means planning, organizing, directing, and controlling the financial activities such as procurement and utilization of funds of the enterprise. It means applying general management principles to financial resources of the enterprise. So it is how the company manages its funds. So from planning, organizing, directing, and controlling the financial activities, such as buying supplies and strategies on how the company will generate income, and also the budget. So it's all about financial management. So what is the benefit or what are the benefits of financial management? So we have here six benefits. So number one, make effective and efficient use of resources. So it is very common to small businesses, like for example, we usually don't have this financial management to small businesses because small businesses such as sole proprietorship, they just only their goal is just to generate income. So they generate income, they sell services or they offer services, and then once they generate profit or income, so they just buy supplies, buy goods. So it's more than that. So if we have financial management to our businesses, so we will know where the money will come from or where is it going to be used, and is the fund enough to buy supplies in the future like that? And do we have enough budget for the future So that is one benefit of financial management. Number two, achieve objectives and fulfill commitments to stakeholders. Number three, become more accountable to donors and stakeholders. Number four, in the respect and confidence of funding agencies, partners, and beneficiaries. So if ever that we are depending on someone, especially funding agencies, partners, and beneficiaries, if we don't have enough funds to manage the company or manage the organization, so if ever that we have this financial management, then they will be able to trust us and they will be able to support us whenever we have financial problems in the future. And then number five, gain advantage in competition for increasingly scarce resources. So if we have minimum resources in the market, so we will be able to calculate the resources that we need, and also we are going to have we can calculate enough budget, or we can allocate um, the funds to each resources. All right, limited resources. So number six, prepare for long-term financial sustainability. What makes good financial management? So there are four components of good financial management. Number one, a clear finance strategy. So a finance strategy is a plan on how the company, uh, I'm sorry, a finance strategy is a plan on how you are going to finance the company or the organization, where the money is going to come from, and where is it going to be used. And then number two, a plan for generating income. So if we have good financial management, we will be able to um, form different strategies on how the company will generate income despite the competition. Number three, a robust financial management system. And number four, a suitable internal environment. The company is not going to function very well without the organizational structure. So we have here the financial management structure. The organizational structure has a lot of branches. So I own a lot of departments. So we are going to focus only to financial management or the finance department in this slide. All right. So we have here the board of directors, and then we have the top management, the president, and it is subdivided into the vice president for production, the vice president for finance, and then sales. And under the finance department, we under the vice president for finance, it is subdivided in two parts, which is the treasurer and control, and each of this has its own function. So a finance department might evolve from a single bookkeeper who works with outsourced payroll, tax and benefits professionals, eventually bringing those functions in-house. As the company grows, the finance department becomes involved in creating strategic plans such as cost containment initiatives, debt service planning, and the profit model of the company. The finance department works with each department to help create budgets and to monitor and track their performance. So each company has its own finance department, whether it's a big or a small one. The company is not going to operate or function completely if it doesn't have a finance department or someone who is going to manage the budget or the money of the organization, whether it's a small organization or not, or a big one. So we have the functions of the financial management. So we have 7 functions. So we have number 1, so estimation of capital requirements. So a finance manager has to make estimation with regards to capital requirements of the company. This will depend upon expected costs and profits and future programs and policies of a concern. Estimation have to be made in an adequate manner which increases earning capacity of enterprise. So I don't need to further explain that. So it's real clear that it is all it's estimation of the budget of the company. All right. And then we have number 2, determination of the capital composition. So once the estimation have been made, the capital structure have to be decided. This involves short-term and long-term debt equity analysis. This will depend upon the proportion of equity capital of a company is possessing and additional funds which have to be raised from outside parties. Number 3, choice of sources of funds. So for additional funds to be procured, a company has many choices like issues of shares and debentures, loans to be taken from banks and financial institutions, so public deposits to be drawn like the form of bonds. So where are the funds coming from, right? And then investment of funds, the finance manager has to decide to allocate funds into profitable ventures so that there is safety on investment and regular returns is possible. So it's not just only going to be spent on supplies, something like that. So it is also going to be spent in investment, allocating funds into profitable ventures. Yeah, such as investment. Okay, so again we have estimation and then determination of the capital composition. So and then where is the fund coming from, and how are we going to use the fund? So we have here number 1, which is investment. Right. So we have number 5, which is the disposal of surplus. The net profits decision have to be made by the finance manager. This can be done in 2 ways. So we have dividend declaration. It includes identifying the rate of dividends and other benefits like bonus. And then retained profits. The volume has to be decided, which will depend upon expansional, innovational, diversification plans of the company. So, alright, so we have number 6, which is the very common one, which is the management of cash. So I think every company or every organization or an individual who doesn't have any background with business will easily define or distinguish whether a certain department is a finance by this function, which is management of cash. So a finance manager has to make decisions with regards to cash management. Cash is required for many purposes like payment of wages and salaries, payment of electricity and water bills, payment of creditors, meaning current liabilities, maintenance of enough stock, purchase of raw materials, and etc. So I think this is basic function or the simplest function of the financial management. And then we have the last one, which is the financial controls. The finance manager has not only to plan, procure, and utilize the funds, but he also has to exercise control over finances. This can be done through many techniques like ratio analysis, financial forecasting, cost, and profit control. So we're going to control the funds. All right, so it's just not only um, allocating the funds, but we also have to make sure that it is being used or utilized properly. Okay, so it means that we have to control the utilization of the funds. So what is financial management system? I mentioned a while ago in this slide. So what makes a good financial management? So we have a robust financial management system. Alright, so what is a financial management system? There is no one model of the financial management system that suits all organizations, but there are some basics that must be in place to achieve good practice in financial management. So when I conducted research about financial management system, I I found this structure, and then I just from the definition itself, there is no basic model. So each company has its own financial management system, its own strategy on how it is going to create a system, how it is going to integrate all the parts, all the components in order to uh, in order to form a financial management system. So it is helpful to identify certain principles when developing a financial management system. This will act as a guide to your trustees and managers when making decisions. So it says here, there is no one model of financial management system. So how is a company going to create a financial management system and its function if it doesn't know of it, or it doesn't have any idea on how it is going to create one. So we have here a guiding principles for financial management system. So we have here consistency. Your financial policies and systems must remain consistent over time. So it doesn't have to be it doesn't have to change your financial policies and systems. Accountability. You must be able to explain and demonstrate to all stakeholders how you have used your resources and what you have achieved. So from the definition itself, you have to explain and demonstrate the funds or the resources that you use to all stakeholders. We have transparency. Your organization must be open about its work and its finances, making information available to all stakeholders. So all the information about allocating resources, it should be all open. You if you don't have to hide something, because I think if we have like if a certain company and its finance department is not going to disclose all the information all about its finances, then um, the stakeholders will think that there is a corruption going on. Integrity. We have individuals in your organization must operate with honesty and propriety. So all the employees working in the finance department should be honest, like that. Financial stewardship. Your organization must take good care of the financial resources it has been given and ensure that they are used for the purpose intended. So it doesn't have to be like you have the money and then you're just going to buy anything that you need. It should be like it should be organized, uh, and it should be efficient, so you don't have to waste a single cent when you have this kind of fund or financial resources with you. All right. Accounting standards. So your organization system for keeping financial records and documentation must observe accepted external accounting standards. All right. So your organization system shall keep financial records and documentation at all times, so that if ever that there will be problems in the future and there will be like disputes, some sort of that, which is one common problem when we are talking about um, money or finance. So you have to keep financial records at all times, whether it's online, hard copy, or soft copy. Alright, so another part of my presentation is a simple structured business financial management function. So I just form a simple one, structural business. So let's say for example I own a small retail store. So I am the business owner and I'm also the manager of the store. So I just divided it into three departments or three parts. So I have the finance and the customer service, which is um, taking care of the sales and also the marketing. So I just put it here, and I have here the supply department, which is involved to the supplies that my retail store is going to sell or use. All right, and under finance I have only the treasurer. All right. So what is the role of the treasurer in my small retail store? So if I will be a treasurer in my small business. I will perform basic financial functions. So I just created a simple one. So I have here four simple functions. Number one, cash management. So required for many purposes like accounts payable, accounts receivable, payment of wages and salaries, payment of electricity and water bills of my small retail store, payment to creditors, meeting current liabilities, maintenance of enough stock, purchase of raw materials, and etc. So in any businesses, whether it's a small one or a big one, uh, cash management is one important function of the organization or of the financial management structure. So number two, so after cash management, after taking care of the money, we have to also select a bank, signing checks and investing excess funds wisely. So if ever that we have enough money or generated enough income for us to sustain the business or to maintain the business. So we have to keep it, of course. And it's the treasurer's responsibility to select a good bank and also how it's going to keep the money. Number three, budget development. So developing the annual budget as well as comparing the actual revenues and expenses incurred against the budget. So we're talking about budget here. So it's the treasurer's responsibility to allocate the budget and then so allocate the budget like for budget for the water and the electricity payment like that, and the wages, the employees' wages. Okay, and then for financial reporting, so we have to keep records at all times as what I said earlier. So financial reporting duties such as preparing balance sheets, financial statement, budgets, etc. So this is the end of my presentation. Thank you and have a great day.